Okay, now we're consolidating around the $65,000 level, and this is actually quite good because you do need consolidations. And why I say it's quite good is, look at this. This is the NASDAQ yesterday. The NASDAQ yesterday had its worst day in a long time. It was down 3%, and even though the NASDAQ was down 3% and the mt. coins were on the market, Bitcoin is up. So that takes care of Bitcoin. When it comes to ETH, we're just days away from the launch of the ETH ETF, and I have a big warning for people who are thinking of buying ETH before the ETF. And the answer is do not. The warning is do not buy ETH before the launch of the ETF. Show you why. Yesterday, the fees for the Grayscale ETF were published. I'll show you why I think it's a bad idea to be buying ETH. But then I'm going to show you what it is a good idea to actually be buying. And then, listen, I'm not one to get FOMO, but I'm going to show you one token that I missed out on, that I got huge FOMO on, and I should have done it, but I didn't actually do it. So lots to do today. Let's go. GM fam, GM, or if it is morning for you, GM. If it's afternoon for you, well, GM for the morning that's already passed. Quite a good day today. We've got Bitcoin consolidating. I'm bringing you crypto love and crypto wisdom. Remember, if you're not already a subscriber to our family, what you need to do is very quickly smash the subscribe button so we can get the show on the road. If you are a member of the fam, just smash the like button. Yesterday we destroyed records, which got our show distributed all around the world. Let's try and do exactly the same thing today. I don't want to waste any time today because I've got so much alpha for you guys today. You know how it works. The more you like, the more alpha I give. The more alpha I give, the more excited I get, the more alpha I give. That's what you need, guys. That's what you need. All right, let's look at where we are. As I said, I'm quite happy with where we're at. We're at 65,000. And I mean, obviously, like everybody else, I want the market to go up and up and up and up and up. But the truth is, what you need consolidation, because you're not at that part of the bull market yet where you get the green days in a row. I tweeted yesterday and I said, we are going to soon get into a part of the market where you're just going to get a whole lot of green days in a row. Most people can't really fathom fathom what that actually means because they haven't been here for a bull market. But we will eventually get to a place in this bull market where you'll get like 10, 20, 30 days in a row where it's just green and you'll never see any red. But that's not this part of the bull market. This part of the bull market, we are consolidating around the 65,000 level. I'll show you in a second why I think it's just a consolidation before the next push up, and I don't think there's anything to worry about here at all. One of the things that I did see yesterday was I looked at the NASDAQ. Now remember, there was a miscorrelation between the NASDAQ and Bitcoin. I'll show you quickly. Let me quickly just get you this chart over here. So remember, there was this miscorrelation between the NASDAQ and the Bitcoin. And I said that they do have to close at some point. That disconnect between the two of them has to close at some point. And what you can see now is the NASDAQ went down about 3% yesterday. Bitcoin held its own. At the same time, the Russell, which is, you can say, the small cap section of the stock market, that went down. But it went down like just ever so slightly, 1% down. So it does really look like we are in a new paradigm. We are in a new section of the bull market, which is what we spoke about. Someone tweeted and they said 5 days outperformance by the Russell 2000 versus the S&P 500, biggest in US history. So it does show that there's been a change in momentum, and now people are going much more into risk on and versus the other things, versus the risk off assets. Just look at this. Look at like big stocks yesterday, like Nvidia. I want to just quickly show you what Nvidia looked like yesterday. It was a bloodbath yesterday. I was watching it actually trade yesterday. Let's see if it will show us how much it was down yesterday. So yesterday, Nvidia was down 7%. You understand how big it is for a stock like Nvidia to be down 7%. So all in all, it does look like we are in a new paradigm. People are much more risk on. The money is moving away from the safe haven, Nvidias and the big stocks, and it is moving into the more risky asset part of the cycle, which is where Bitcoin and all the other altcoins actually take off. And as I said yesterday, or as I said earlier, it's good to see that the NASDAQ was nuking, the Mt. Gox tokens were getting into the market. Bitcoin didn't give shit because it was probably oversold before and it was now starting to climb up again. And now, as Rekt Capital says, we need to claim the 65,000 level as support. And I think we're doing very well to actually get there. Once we claim the 65,000 as support, which is, by the way, midway through this cycle. Once we can claim, in fact, let's maybe even draw a line here so we can kind of gauge where we are on the 65,000 level. So it's about there. Let's quickly draw a little line here, a trend line. Got so many lines in this chart. I must clean it. I'll clean on. Okay, so that's a very ugly line. Let's quickly just make it a different color. And there we go. Just make it a thin line. So we're monitoring that. We want Bitcoin to make that 65,000 level as support. And then we can carry on for the next level up. That's basically the next thing. When you look on chain, you can already see that on the on chain, the next level up is already starting to show, because as this chart shows, a bullish impulse is forming in the market. That means that the demand for coins exceeds the supply for coins that was realized a week ago, which means that the tide on chain is actually turning. And when the tide on chain turns, then of course, later on, the tide off chain works. Also, what we're seeing in terms of on-chain, which is showing us that the tide is turning, is that we're starting to get more stable coins into the market. You can see we were quite flat, and now we started to turn again, and we're starting to get more stable coins coming into the market. Now, the uptick is very, very small, as you can see. It's like very, very, very small, but we're not worried about the magnitude. We're worried about the direction, and the direction shows us that the trend is starting to change. Because if you notice trends early, that's when we can do it. So it feels to me like this is playing out again. So remember that you've got this halving wedges, you've got this like breakout just after halving. It feels to me like this is the one that takes us into the breakout, or at least maybe repeats what happened last time, where you can see we touch that, we'll tap it once, tap it twice, tap it 3 times, tap it 4 times, and then we carry on, and then we go into the next part of the bull market, which is the part where we get all the green days in a row and whatever else. If you like these charts and these anecdotal charts, someone says it's been almost 8 years since Bitcoin saw this last bullish cross. There was a bullish cross. We saw it in 2017. He says, do it with the information, what you see. So, I mean, just nice anecdotally, some really cool stuff. Let's quickly look at Politify. Let's quickly go back to our Politify section. So you will remember that I tweeted not so long ago, and I said within 14 days, that was on July 12th, I said within 14 days, Joe Biden will be gone. And I started seeing the whispers on the wall that they're going to try and get Joe Biden to go. Now, how would they get him to go? Well, they could try and assassinate him. I don't think that's going to happen. Or they could just fake an illness and say like he's incapacitated. And yesterday, he started actually giving us signs that he said if he did get a medical condition, then he actually would consider dropping out of the race. Now, they need Joe Biden to drop out of the race, because right now, if he carries on, I mean, look, right now, there's a 67% chance of him actually dropping out of the race. They need him to drop out, because otherwise the Democrats have got no chance. Now, if he does drop out, it's probably bad for Bitcoin and bad for markets, because then they put in another candidate, and then the market says, well, is this candidate good enough to beat Trump? If the candidate is Kamala Harris. Now, again, I'm showing you poly markets because I think it's probably the most accurate. So let's quickly go in poly markets. So they're now talking that Kamala Harris will be the Democratic candidate. If it's Kamala Harris as the Democratic candidate, then there's only one person that's worse than Kamala Harris, and that's Joe Biden. Like it's you're really talking about like when you get to the bottom of the barrel, and you're like really scraping the bottom of the barrel where all the shit is, and all the disgusting shit, all the leftover stuff is. That's where we are with the Democratic nominations. That's really where we are with the Democratic nominations. Anyway, mysteriously, Joe Biden tests positive for COVID just after saying that he would drop out if a medical condition confirmed. He said, I'm sick. And then, of course, the intern said, I'm sick of Elon Musk and his rich buddies trying to buy this election. If you agree, pitch in. I think he's making a big mistake, because he's going for the most influential, most followed, most loved people in the world, and he's taking them on. It's as if he's become his own worst enemy, or at least his social media intern has become his own worst enemy. Now, I must say, this is a very interesting kind of COVID, because Joe Biden had the vaccines. He said that if you have the vaccines, you're not really going to get COVID. And I don't know, but if you got COVID, shouldn't you be wearing a mask? Anyway, he feels good. He's in good spirit. The election odds are very much with Trump. Also, what's encouraging to see is that the meme coin mindshare is actually very similar to the poly markets mindshare, which is also very similar to the poll. So the meme coin mindshare, 82% the mindshare is on Trump, and 17% is on Biden. And you can see that here, if you look at in the politics and you look at it, 65% are on Trump, and if you look at Biden, 11%. So you can kind of see that that the meme coin market is actually finding a use. It is actually finding a use. It is actually becoming a derivative of the prediction market, which is actually quite cool. On the other side, you've got Trump. Trump's doing all the right things. I mean, just listen to this.
I wish I had that happen, but I got lucky. God was with me.
I mean, this ear incident has given him amazing things. It's giving him fight. It's giving him God was with him. It's allowed him to be more emotional, more of a person, which is everything that he needs and everything. Yesterday, he put his beautiful granddaughter.
Hi, everyone. My name is 𝗕𝗘𝗢𝗕. I am the granddaughter of Donald Trump. I'm speaking today to share the side of my grandpa that people don't often see.
So she shared a very emotional speech about the side of her grandpa and what a nice person he is, etc., etc. And I really think that he's now moving much further forward in the polls and he's making all the right things. The one interesting thing that came out yesterday at the RNC was that he said he's considering Jamie Dimon as the Treasury Secretary. And he says that Jamie Dimon has also changed his tune on Bitcoin. Now, you'll know that Jamie Dimon has always been very much against Bitcoin. But you see, it's interesting what politics does. Because remember when Gary Gensler, before he was at the White House, before he was at the SEC, Gary Gensler was an MIT blockchain professor. And only when he was brought into politics did he turn very much against crypto. Now, this is the opposite happening. Just shows you how the political game is played. Like, nothing is as it seems. These are the worst individuals in the world. And now, I mean, look, I think that Jamie Dimon should go to hell, but I mean, maybe Trump will give him a position. I think he actually will. He'll get him to replace Yellen. I guess that's what's going to happen. Anyway, let's go to the main story of the day. And that is, as I said, do not buy ETH. And I'll show you why you shouldn't buy ETH. We know that the ETH ETF is launching very soon. Yesterday, they published the fees for the ETF. All the fees are around 0.12, 0.25, except Grayscale. 2.5% fees, which means that their fees are 10 times at least what everybody else's fees are going to be. Now, it's obvious to understand why they did that. They did that because they already have 2.96 million ETH. Now, 2.96 million ETH at today's prices is about $10 billion worth of ETH. So at these prices, Grayscale is making $250 million a year just for holding other people's ETH. And so they don't want to give up on this revenue, right? They're not interested in actually giving up on this revenue. And so what they're doing is they're doing the same thing that they did on the GBTC, on the Bitcoin ETF. And they're keeping their fees high. Now, the problem with keeping the fees high is that people will start selling out of the ETH, which is the GBTC equivalent of ETH, and they will start selling out and fee switching. But some of them who will sell out and they won't fee switch, which will put us in exactly the same situation that we were with the GBTC. So now we're going to have GBTC bleeding out Bitcoin, and we're going to have the ETH bleeding out ETH. And so for me right now, as much as I'm very bullish about the ETH ETF, I kind of sit on the side of where all these analysts say that they're kind of saying, look, it's a huge miss by Grayscale. If you're going to charge 2.5% on ETH, they've also got a Grayscale Mini, And on the Mini, which is taking in all the new money, they're charging in 0.25. So their fees are just too expensive. So we're going to start getting an outflow, which is a bit of a problem. We're going to start getting all this outflows. I think it's a very bad strategic miss by Grayscale. I did ask, though, because a lot of people know that Grayscale have $10 billion worth of ETH that is going to come out onto the market. And they say, I did ask on my Twitter, I said, what do you think is going to happen on the ETH ETF? 14 days after the ETF launch, is the ETH price going to be up or down? And actually 60% of people said that the ETH price was actually going to be up. Okay. I don't know. I mean, I think we could play the Bitcoin playbook where we get a slight dump when people are nervous about the outflows from ETH. And then at some point it actually turns. And I was looking for some analysis. And I found some analysis here where he breaks it down. This account is 𝗕𝗘𝗢𝗕𝗥. And I'll show you what he actually says. He says, look, Eric Balchunas predicted that the ETH ETF will attract 10 to 15% of the Bitcoin assets. It's consistent with Hong Kong crypto ETFs, where ETH make up 60% of the total AUM. So we're talking about 15 to 16% of the total ETF inflows to go into ETH. In 5 months since the Bitcoin ETF launched, 9 BTC issuers attracted 37 billion in assets under management. Assuming ETH attracts 15% of that, that would be $5.6 billion. Okay, so we know $5.6 billion will be in ETH. In the same period, Grayscale experienced a 56% decrease in their AUM, and he works out the decrease in the AUM. And then he says, currently Grayscale holds 11 billion in ETH, assuming that 53% will be sold by Grayscale trust holders. It will equal to $5.88 billion, which is the predicted inflow, which is $5.6 billion. So he says, with this analysis, the outflow should equal the actual inflow. Now, I think that his analysis is actually a little bit wrong. And I think that we're going to get a net inflow, exactly like we got a net inflow in Bitcoin. But I don't think it's going to happen quickly. And that's why I say that I'm not sure that I'd be putting all my money into ETH now. I'd be a little bit more cautious in the trade. I think the trade is very, very, very bullish. Problem is, when you have a $10 billion overhang and you have fees of 2.5%, you're going to get an outflow. And when you get that outflow, it's going to scare the market. And when it scares the market, ETH's going to go down. And that's going to give you the actual opportunity to land up buying. Anyway, either way, we know that when the institutions come in to buy ETH, we're getting a different type of institution. We had one type of institution which wanted a store of value, and they landed up buying the Bitcoin ETF. The new investor, the investor in the ETH ETF is not looking for a store of value. These are technologists. They look at ETH like a technology. And if they're looking at ETH like a technology, you need to start thinking about how these investors are actually thinking, okay? So how do these investors actually price technological products? Well, what they look at is they look at the revenue that the products, they look at the growth rate. Then they also look at the revenue that the protocols are actually making, right? And I saw this and I thought it was very interesting to actually start evaluating this, to actually start thinking like the investment fund managers. And this tweet said, top revenue generating protocols in 2024. Base was the first one, 52 million year-to-date revenue, which means you can probably double it because year-to-date is about 6 months. Lido, 59 million. Aerodrome, 85 million. Athena, 93 million. Solana, 135 million. MakerDAO, 176. Tron, 852 million. And Ethereum, 1.42 billion. When the new investors come into the market, what they're going to be looking at is they're going to be looking at a valuation model that they can actually understand. Now, what is the valuation model that they can actually understand? They look at growth in subscribers or users, and they look at growth in revenue. And that's why I say that if you want to beat the institutions at their own game, what you want to be doing is you want to also start looking at these protocols by revenue. So ETH, let's look at the fees, Lido, Uniswap, Tron, Cake. You need to start thinking like a VC, and it came like an investor, like a tech investor. And it came from this article over here where they broke down all the revenues for all the different revenue generating protocols. Not all, but some of the top grossing ones. And so it does talk to Chris Boniski's thesis, which he spoke about yesterday. You can just hear it now.
When you look at crypto as an asset class, there are probably fewer than 50 long-term investable assets. And I mean like investable, like buy this thing and hold it for 10 years. Because investable, at least for me, with how I was trained, is it has fundamentals that are going to drive the flows consistently within the market structure such that it appreciates over time, if all else things being equal. And when you look at
fundamentals, you need to get flows that will keep the market the market price going up. And so what you're looking for now is you're looking for a new type of protocol. You're not looking, you got to break up investors into two types of investors. The investors that have been in crypto up until now are very much venture capital investors. Venture capital investors are used to taking risks for investing in protocols that are very, very, very young in their lifestyle, in their life cycle, and taking a gamble, a big gamble on those protocols. Typically, when it comes to VC, you're investing in 100 projects and you're hoping to lose in about 95 of them, 1 or 2 of the other 5 to remain even, and then 1 or 2 of them to shoot the lights out and get over 100x. That is how a venture capitalist makes investments. And up until now, the funds that have been playing in the space are very much venture capital funds. That's the money that's been in the space, has been retail money and venture capitalist money. But now we've got a new kind of money coming in. And it's not the Bitcoin money that wants a store of value like gold. It's a different kind of money. The money that's coming in now is money that is looking for strong fundamental tech investments. It's not VC money, which is looking to buy projects at the beginning of their life cycle. It's not that money that's coming in, because that money has been in. It's not money looking to support a store of value, because that's the Bitcoin ETF money. It's money that is looking for stable growth of cash flows, because that is how they know how to price things. So it's a new type of money in the market that's going to come in. They're going to come into the ETH ETF because they're going to buy the base layer of the technology. And then the analysts are going to think that they're very, very, very smart. And they're going to start pricing these things on what they call a revenue to FDV multiplier. Okay, so revenue or a profit to a PE ratio, a price to earnings ratio. What PE stands for price to earnings ratio. It's when you take the price of an asset, which is the fully diluted valuation of an asset, and you divide it by the earnings that the asset is actually making. And that is how you price things on the stock market. And they're going to come into crypto, and they're going to look for assets that they can value on a price to earnings ratio, or a revenue to price ratio. And so if they look for that, then we should take some inspiration from this article over here, where it identified some of the biggest protocols, Base being one of them. Now, you can't really invest in Base, but you can invest in Coinbase, right? Lido is another one, makes $59 million revenue to date this year. Aerodrome, get this, $85 million revenue to date this year. Athena, $93 million revenue to date this year. Solana, $135 million in revenue. We have to start thinking like these technology investors. And what they're going to do is they're going to take the revenue and they're going to divide it by the fully diluted valuation. And then they're going to get to a spreadsheet that looks something like this. So you look at, for example, Aerodrome. You say, okay, the fully diluted valuation. For me, everyone says FDV is a meme. I think that market cap is a meme. And we'll talk about that in the next part of the show. But for now, I only want you to look at the FDV. Okay, so we're only looking at this column over here. And we're going to say the following. We're going to say, you're going to take your annualized revenue of the protocol, and you're going to divide it by the fully diluted valuation of the protocol. So let's look at an example. We know Aerodrome has an annualized revenue of $160 million. How do we know that? We can either go to token terminal, or you can just use this thing here where it says Aerodrome $85 million, okay, in revenues for the half year. So times that by 2, 160 million, 170 million, and you divide that by the fully diluted valuation, which means that Aerodrome is trading at 7 times their annualized revenue. That's quite cool. That's actually a good valuation. You can sense check that against Velodrome. So Velodrome is trading at 7 times its valuation. So they make $22 million per year, and their fully diluted valuation is about 178 million. So this one, good value. Lido makes $107 million annualized, and the fully diluted market cap is $1.8 billion. So this is now showing less value. Now, Maker is on a 9, GMX is on a 10, Banana Gun is on a 9.9, Pendle is at 65. Okay, here I would start raising alarm bells and saying, hold on a second, this one might look a little bit expensive. Jupiter is on 81. So again, what you're going to start looking at is you're going to start thinking like a technological investor if you want to play that game. There's a transition where you transition out of being a venture capitalist. We've all been venture capitalists. We've been investing in protocols with no revenue, very, very, very early stage. But now the market's maturing, and there's going to be a new kind of buyer, and the new kind of buyer is going to start looking for these value investments. And so you can see that when you look at the bubbles, if you look at the stuff that has actually been running today, Athena, Jupiter, I saw earlier some others, but they were all running, or some of them were running because they were the ETH revenue trade beta plays. It's not the same as the ETH betas. The ETH betas are all the things that are going to go up because of the ETH ETF. That's this list over here. These are the ones that are going to appeal to a more technological investor. And I think that what you need to get yourself into understanding is what is a high FDV to annualized revenue, and what is a low. Low is about 7. High is anything over 20. You could say is pretty much high, and that's how you can see. What's going on. Now, I did say to you that everyone says that FDV is a meme, right? And I always say, no, FDV is it's the only important thing, and everything else is bullshit games that tokenomics people play. And I want to show you what the difference is between investing in FDV versus investing in market cap. And I think there was one tweet which summarized the whole thing. And I dedicate this tweet to the Irishman who always says to me that FDV is a meme. Okay, now FDV is not a meme, and this is going to show you why FDV is not a meme. If you would have bought Lido 3 years ago, in July 2021, the price of Lido was $1.85. It had a market cap of $40 million. Today, the Lido price is still $1.85 and has a market cap of $1.7 billion. Okay, what's the difference? The difference is that market cap is based on circulating supply. And I'll show it for those of you who don't understand it. I'll show it to you guys over here. So market cap is based on the circulating supply of a token. The circulating supply of Lido right now is 1.76 billion. The fully diluted valuation is 2 billion. So Lido has been emitting tokens onto the market. Now, the reality is that if you bought this thing looking at the market cap, as the tokens were released, more and more tokens were released, there was more and more selling pressure. And therefore, if you would have bought it in July 2021, when the price was $1.85, it had a market cap of $40 million. Today, at $1.85, it has the same market cap of $1.7 billion. I say that when I look at a token, I never, ever look at market cap. I only look at FDV, and I make my decision based on FDV alone. If you're looking at market cap, you need to make 100% sure that the growth in the protocol is going to grow quicker than the growth in the token distribution. Otherwise, you're going to be like these Lido holders who have been holding the token for 3 years and have got themselves zero return, while the protocol's market cap has gone from 40 million to 1.7 billion. You see what I'm saying? And that's why when I'm looking at my analysis here, I'm very, very pedantic about making sure it's FDV and not market cap. FDV is king here. Market cap is actually the meme. And I think that's the important message that I wanted you guys to take out today. See a lot of people commenting here about 𝗏𝗘 being on a run. I mean, I love this, and I'll tell you why I love this. Because, here we go. 𝗏𝗘 actually is on a run today. Beautiful run today. Now, I'll tell you why I love this. I love these kind of charts, right? Because when price was going down on 𝗏𝗘, everybody kind of wrote off the project and said, oh, 𝗏𝗘 is a dead project. And you can see that the price went down from, I mean, let's just take this high over here, which is, that's not the high, it's just a high. And it went, it is high, from 14 cents. And it went all the way down to, I think, 4 cents, 3 cents, where people were dumping the token. Okay, but the fundamentals of the project hadn't changed one bit. Hadn't changed at all. And I tweeted about this morning, and I said, you know what, you all forgot about 𝗏𝗘. Because you saw, and then what happened was, this morning, a whole lot of people woke up, and I want to show you something. A whole lot of people woke up, and they said, oh, let's go quickly look at 𝗏𝗘's webpage. And they looked at 𝗏𝗘's webpage, or at 𝗏𝗘's Instagram, Twitter page. And then what happened is they clicked on this video over here, and they realized that this video actually has 1.8 million views. Okay, it's one of the best videos I've ever seen, and it's the best coverage of the situation. It's got 1.8 million views. So while you were all dumping your tokens, we carried on making a video every single day. I said, you saw the last video had over 1.8 million views. Then you remember that the elections are coming up. Then you went onto his timeline and saw that despite the price, he made a video every single day. Yeah, 𝗏𝗘 didn't mind the price. He just made a video every single day. And then you remembered that every time there's a sponsor on a video, tokens are burnt. And then you also remembered that when you're getting 1.5 million views on your videos, it's very easy to get sponsorships. And then you did the maths, and then you realized that this is not a meme. In the interim, what we were doing here is we were just buying and buying and buying tokens. And what we love is we love it when we get to situations where the weekends are, which idiot would be selling their 𝗏𝗘 at 3 cents, at 0.03? I'll tell you who was buying it. We were buying it because we wanted more of the supply to keep us much, much, much more incentivized. And we were just waiting for all these weekends. And now everybody's kind of woken up and remembered that this project has fundamentals. And I think that's what people forget. For short periods of time, while the market is in a panic, the fundamentals will disconnect from the price. And when the price and the fundamentals disconnect, you either got to be buying or you got to be selling. In this case, we were buying. I'll show you two other examples. I mean, you saw Gummy and Baked, both of them down. I told you, we're waiting for all the weak hands to get out. We're waiting for all the weak hands to get out of Gummy. We're waiting for all the weak hands to get out of Baked. And then you may have noticed that today on my Twitter, I posted something very cool, which should give you an idea of what we're thinking for this or what's happening now. Is we're actually going to start investing in content, actual real content to build these characters. So we're looking for script writers and animators that can write and produce an animated mini series. We want it like 10 to 12 minute shows that actually build the characters and stuff like that. We're looking for DMs, we'll also publicize it, but we want a shit hot team that can help us produce actual real content on these things. And we want to actually go all in and build them up as proper characters because we know how to make content, but we need someone to help us with the animation and the script and everything else. So why am I showing you this? Because I think it's a lesson to say that don't write off. Look at the fundamentals and don't write off tokens just because the price has gone down. Look at what's happening under the hood. And I think 𝗥𝗘𝗢𝗢 was a great example. They didn't give a shit. They just make videos every single day. And they made videos every single day despite the price. And that's what I forced the team to do. And now look where we are. We're back here and we're back on the app. And there's election season coming up. So it's up to you. I'm not telling you to buy or sell. I'm just telling you not telling you to buy or sell, just telling you to watch the fundamentals. I'm stuttering a bit because whenever I think of this fucking tweet that I got last night, with this DEX screener address, and I was like, no, it's too late. I'm not buying this thing. And then this morning I woke up. Now again, I got to tell you, I'm not invested in this team. I don't know them. I haven't spoken to them. I just love this.
When you posted Mr. Miggles' afternoon snack, he got lots of love. But then Miggles started popping up in other places. Mr. Miggles was going viral, and at first it was fun. But then it kept
So there was this cat, Mr. Miggles, from the Coinbase ad, and then they made a meme coin of Mr. Miggles. Look at it. And now the meme coin's exploded. It's at a $50 million market cap. You saw I got the information at 10 million last night, and I was like, no, I'm not buying it at 10 million. I was tired, and I was like, I'm not buying a meme coin for 10 million. And I was like, shit. Why didn't I buy it for 10 million? Now I would have made 5 times my money. And it looks like, again, I don't know, again, full disclosure, I don't know the team. I've done no research. I don't know anything here. I just love the concept. And it looks like this Mr. Miggles is actually starting to run, which is amazing. One of the reasons why I didn't actually do it yesterday, so I didn't have money on base. I should have just used 𝗕𝗔𝗕𝗏, and I should have just transferred money using 𝗕𝗕𝗕. It would have taken me 1 minute, but I was tired. I was very tired. I'll give you, I mean, if you guys, I think, I know some of you yesterday joined me on Bitfunded. Let me know in the chat how many of you have taken a challenge. Let me know how your challenges are actually going. I know that they added on this challenge, this $5,000 challenge for us, but it's only added on for a week. How it works is you're trading with other people's money, but you got to pass 2 challenges first. First challenge, you got to get 8% return. Second challenge, you got to get 5% return. And then the third time, you're actually trading with other people's money. So if you think you're a good trader and you don't want to blow up your own account and you just want to limit your loss to this loss, $49 or $99, I think this is an amazing risk return to do it, is to go to Bitfunded. I see a lot of you are signing up. Let me know how it's going. Go to Bitfunded over here. Just go to bitfunded.com, sign up, and then just play. It's the best way to trade without blowing up your portfolio. Then, lastly, before we go, if you want to join Eric Crown's trading school. So remember that we had the first cohort. A lot of you missed it.
Trading psychology issues are actually not trading psychology issues. They're trading strategy issues. A strategy, just by the definition of it, as you've seen in this program, is something that has objective indications which back test, meaning that you've seen this thing play out again and again and again, meaning that this is not going to be the last time that it happens. So when you do feel that FOMO, remind yourself, am I playing out my strategy or not? If you are, you can feel the FOMO, but you don't have to act on it.
So if you want to learn how to trade from Eric Crown, and the guy's a legend trader, you go to this link over here. You got to use this link over here. Sign up to Crown's Trading School. You have 6 days to get in. You see, 6 days to get in. It's a free course, but you got 6 days to get in. What else is it, Josh? Little podcasty type thing. Oh, you want me to show them the trailer for the podcast? Yeah. Are you sure? I think they want to see it. Guys, let me know what you think. You know, I told you Jason Derulo came here the other day. I roasted this guy like you have no idea. I'll give you a little snippet of the interview. I roasted the guy.
Yo, you should do a coin. Hey, can we do a coin together? And I'm like, no.
Pop sensation Jason Derulo
just launched his own coin.
When I get off the plane, I'm getting all these messages, you scammer.
On Twitter.
Wait, like, what do I do? And I'm like, what the fuck just happened? I know that there's a coin. I'm linked to the coin.
I apologize to everybody affected.
I had been scammed. And I have not seen $1. It's not believable, right?
It's not believable.
It's the craziest shit that's ever happened to me.
So that's going to drop on the weekend, my interview with Jason. You can then make a decision whether it's a scam coin or not a scam coin. I've made my decision. You'll see what my decision is at the end of the interview. I will see you guys again. Actually, yeah, I'll see you guys again tomorrow. Josh, press the button. Until then, trade well, my friends.